The thing that I think will work against this happening, Jason, so yeah, you're right. The maybe it goes to 3,000 or 3,200. But if you look again today, and what I mean by like the market has roughly shaken this off, like the fact that the markets right now, as we talk, are essentially down half a point. The S&P is down, 12 points. It means that they are looking for any and all reasons to say this is a solved problem, move on, nothing to see here. Now, that is a psychological reaction. Most of that, if you actually, I called a friend today and I said, where are the flows? And he said, retail right now is where all the flows are, meaning it's retail that's buying. They're in the 30th, 35th percentile of where they normally buy, which is a pretty healthy signal.
Wait, explain what you mean. Who's buying?
So the way the market works basically is you have buyers and sellers. And, to make it really, really simple, you have hedge funds as one class of buyer.
Sure.
You have ETFs, but they're not really because they have
funds.
Yeah, but they have fixed strategies. And so, they're hedging, they're moving, but whatever. And then you have retail. Okay. So it's retail and hedge funds. Those are the two main pockets of where the flows come into the stock market from. And you can get a real sense of what's happening, what the psychology of the market is, if you see what those flows are. And right now, what we see is that hedge funds are largely on the sidelines. What that means is they've been so battered and bruised. In some ways, I think they're licking their wounds, but they're mostly waiting. They do not find a compelling reason to buy, right?
But they have to buy at some point, right, Chamath? This is their business.
No.
Well, I guess they would have to find other opportunities, right?
Their business is to make money relative to their index. And so if their index gets torched, them doing nothing makes them look like geniuses. So they don't necessarily have to buy at any point. They just need to make money in the end. So right now we're in a situation where the markets are looking for a direction. Retail seems to think that direction should be up. Hedge funds don't have an opinion, are saying, we're just going to wait this thing out.
Okay.
Meanwhile, the data, at best, is a question mark. And I think that's the tension we have right now in the stock market, is the psychological desire is for this thing to be over. Meaning, I think people want to hear inflation is done, we're starting the recession, give us 3 or 4 quarters, we'll be out, here's a steady state interest rate, let's go tech.